Welcome back, it's JWalter here. One of my subscribers made a suggestion regarding an article that he found to be very interesting. This is from Ben Cranklin. He said this article that was actually posted by Diana Olick that's titled "Home Listings Suddenly Jump as Sellers Worry They May Miss Out on This Red Hot Housing Market." So that's the topic of today's video. I'm actually going to be looking at the article itself and reacting to it. So thank you so much for the suggestion there. And by the way, too, if you guys have any suggestions regarding future videos, then leave me a comment below. So here's the article that was posted by Diana Olick. This is on CNBC. It says, again, home listings suddenly jump as sellers are worrying that they're going to be missing out on this red hot housing market, right? And it says, sharply higher mortgage rates have caused a sudden pullback in home sales. And now sellers are rushing to get in before the red hot housing market cools off dramatically. And I'll be the first to admit, because I thought that a lot of homeowners like myself were not going to be selling their houses because they're locked in with mortgage rates of less than 3%. So why would you sell to when you have a mortgage rate of less than 3% with rates right now around 5.5% or 5.3%? But I was definitely wrong. It's a good thing I'm not a real estate market fortune teller because I'd be fired. But it appears that a lot of home sellers or a lot of homeowners are looking to sell their houses right now because they want the equity of their houses and they want to capitalize on these high home prices. And because of this, according to Realtor.com, the supply of houses for sale actually jumped 9% last week compared to the same time period 1 year ago. And here's the actual article itself on Realtor.com that I found. And this is for the week ending May 21st of this year. So again, housing inventory jumped 9% from 1 year ago. This is the biggest year-over-year gain observed in their weekly data history, which goes back all the way to 2017. It's also the first consecutive weeks of gains since 2019. So it's great to see that housing inventory increased. However, according to Realtor.com, we are still 60% below the levels we saw before this pandemic started here. And their data for May is also calling for more houses to be listed for sale, but still remains limited compared to pre-COVID. So here's a summary over the past few weeks for new listings as well as active listings. New listings is when a home seller lists their house for sale. That's considered a new listing. And active listings is a total pool of all those listings that get listed for sale. So it's a total number of houses listed for sale. That's active listings. So overall, year to date, we're down still 16%. But however, look at this though. So for the week ending May 7th of this year, the number of active listings was basically flat compared to 1 year ago. By the way, these are changes on a year-over-year basis. So for the following week, and the week ending May 14th, we had a gain of 5% over the last year. But now the most recent stats we have is an increase of 9% for the week ending May 21st, 2022, compared to the week ending May 21st, 2021. We're also seeing an increase in the number of new listings according to Realtor.com as well. So year to date, we're down 1%. However, we saw a 4% gain for this week, followed by 6% the following week, and most recently, also a gain of 6% compared to 1 year ago. So what this means for home buyers is that if you are looking for a house to buy, you may see more options available. Also, you may see less competition for those houses that do get listed for sale, especially compared to 1 year ago. I mean, 1 year ago, we had a very severe lack of houses for sale. Therefore, when a house got listed for sale, there was a ton of offers on those houses in general. So right now, because home buying demand has been decreasing, however, we've been seeing an increase in housing supply, it's going to give more options for home buyers who are still looking for houses for sale right now. And going back to this article from CNBC, they said Redfin also reported that the number of new listings rose nearly twice as fast in the 4 weeks ending May 15th as they did during the same time period 1 year ago. So I actually want to share some stats for the Boise, Idaho market, as well as the Austin, Texas market, because those are probably the two most popular destinations or most popular places to buy houses because of COVID. A lot of people with work at home arrangements are moving to more affordable areas, which have been Boise, Idaho, and Austin, Texas, for example. However, home prices have increased greatly in both of these markets. Compared to April 2020 to April 2022, both in Austin, Texas and Boise, Idaho, home prices have increased more than 50% over the past 2 years, which is absolutely insane. But here's the latest stats we have from Redfin. And let's first start with Austin, Texas. So for Austin, Texas, look at this. This is the number of new listings compared to the past couple of years, at least compared to 2019 and 2021. So this black line here is 2022. This orange line here, or red, whatever you want to call it, is 2021. This blue line here is for 2019. As you can see here, as of, let's see, the end of April, the number of new listings was basically on par with 2019 and also in 2021 in Austin, Texas. But look what happened after that. Right now, the most recent stats we have is actually for the 4 weeks ending on May 22nd of this year. So the number of new listings in Austin, Texas is actually up 15.8% compared to 2021. Also in Austin, Texas, when you look at total active listings, which is housing inventory, it's actually up 8.16% from 2021. So right now they have just under 6,000 houses for sale. By the way, this is the 4-week rolling average as of May 22nd. So they have approximately 6,000 houses for sale. So above 2021 levels when we had approximately 5,500 houses for sale. However, compared to 2019, look at that. 2019, we had approximately 8,553 houses for sale. So compared to pre-COVID, even though this has been going up, we're still well below pre-COVID levels. Also, interesting enough, even though we have more new listings and also more housing supply in Austin, Texas, pending home sales have actually decreased. So right now, pending home sales have decreased by about 9.5% compared to 2021, even though we have more houses listed for sale in Austin, Texas. And meanwhile, the median sold price is up 25% compared to 2021. The median sold price is at $577,000. But have a look at this because this is pretty mind-blowing. Look at price drops. Look at this. So price drops are, again, is for 2022 here in black. So basically we started the year at approximately 1.7%, which is basically on par with 2021. But look what happened basically at the beginning of April of this year. So we went from 2.3% for as of April 10th. Now we're up to 6.1%. So right now in Austin, Texas, they're almost surpassing 2019's levels. And obviously, if this trend continues here, this is going to be a strong sign that home buying demand is decreasing, given the fact they have a big increase in housing supply. Okay, that was the Austin, Texas market, but let's have a look at Boise, Idaho, because there's some pretty big changes here as well. So here's a number of new listings. Look at this. The number of new listings is up 102.4% compared to 1 year ago. Look at this, basically going straight up ever since the end of April. So basically in May, the number of new listings has absolutely skyrocketed, basically going straight up here. So pretty crazy to see that. However, though, when you look at the number of active listings, which is another word for housing supply, take a look at this. So even though the number of new listings has increased over 100%, active listings, which is total housing supply, is still down 23% compared to 2021. So according to Redfin, for the 4 weeks ending May 22nd, we have just over 2,000 houses for sale. Again, that's a decrease of 23% compared to 2021. Back in 2021, during this time, we had approximately 2,772 active listings. That was also a decrease of 27% compared to 2020. But because they saw a big increase in the number of new listings, this is causing a lot of more price reductions for home sellers right now. As you can see here in black, look at this. The percent of active listings with price reductions is at 10.4%. Compare that to 2019 at this time, it was 4.4%. Back in 2021, it was 2.3%. So basically in 1 year in Boise, Idaho, they went from 2.3% of active listings with price drops all the way up to 10.4%. So basically 5 times as much price reductions now compared to last year. But meanwhile, though, the median sold price is up 18% year over year. The median sold price is $546,000. So we have not yet seen an impact on home prices in Austin, Texas, or in Boise, Idaho, even though we have a big increase of new listings. All right, so going back to this report from CNBC, here's what they had to say here. This is according to Redfin's chief economist, Daryl Fairweather. Rising mortgage rates have caused the housing market to shift, and now home sellers are in a hurry to find a buyer before demand weakens further. And as you guys all know, the pending home sale index, according to the National Association of Realtors, I made a separate video a few days ago regarding that, but the number of pending home sales, which is a measure of signed contracts of existing houses, not closings, actually dropped in April compared to 1 month ago, and also dropped 9% compared to a year ago as well. This was also the 6th straight month of pending home sale declines and the slowest pace in nearly a decade, according to the National Association of Realtors. Also, as I mentioned in my video from about a week ago, the number of new home sales decreased 16% from March. This is a big decrease compared to 1 month ago. And it goes on to say the following in this article here. Sales are slowing because mortgage rates have risen sharply since the start of this year, with the biggest gains in April and May of this year. However, though, even though we saw big gains in April and also in early May, we also started to see a decrease in mortgage rates as well. So right now, according to the Mortgage News Daily, let me just refresh this. The current rate is at 5.25% at the time of this video, which is the 27th of May. However, though, when you look at the chart here, let's have a look at this. This is from mortgage rates basically peaked at the beginning of May, but they have fallen ever since then. So right now, mortgage rates have decreased approximately 0.4 percentage points in the matter of the last 3 weeks. However, compared to 1 year ago, we are still up greatly. So 1 year ago, rates were at 3.11% for people who have excellent credit. That's an increase by 2.14 percentage points from 1 year ago. A big increase, which is causing home sales to falter, really. However, it's important to note that even though mortgage rates have been increasing and home buying demand is decreasing, and we're seeing this big increase of housing supply, we're not seeing a housing market crash. And Lindsay Katz, who's a real estate agent in the Los Angeles area, had this to say. We used to get 10 to 15 offers on houses. Now we're only seeing 2 to 6 offers on a house, a good house. So basically, our housing market's not crashing right now. It basically was going 100 miles per hour 1 year ago. Now it's going approximately 60 miles per hour, even though we're seeing a slowdown in our housing market. And before we wrap up this video, I want to share a really good example about mortgage payments over the past few years and how that's impacting home buyers. So here it says, while home prices rose steadily during the first 2 years of the COVID pandemic, again, of course, March of 2020 to March 2022, falling mortgage rates largely offset those increases. Those were basically in 2020, though, and 2021. So for example, in May of 2019, a buyer purchasing a $300,000 house with a 20% down payment and a 30-year fixed rate mortgage would get an average rate of around 4.33%. And that monthly mortgage payment of principal and interest only would be $1,192 per month. Again, that's in 2019. In 2020, though, that same house would be 5% more expensive, but mortgage rates fell to 3.4% from 4.33%. So the monthly mortgage payment actually dropped to $1,119 per month compared to just under $1,200 per month. So fast forward to 2021, the monthly payment was up only by $100. However, this month, with prices rising another 21% year over year and mortgage rates surging to around 5.5%, the monthly payment hit $1,991 per month, almost $800 a month more than it was in 2019. So basically in the span of 3 years, we went from approximately $1,200 for your mortgage payment to now just under $2,000. And because of this, home buying demand is decreasing and home sellers are seeing far less competition from home buyers right now. So comment below with your biggest takeaways from today's video. If you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you have an awesome day and I look forward to seeing you on the next video.